Is there a real risk that the key industries that have been set up, key companies, could be sold in this phase where, let's face it, sterling has taken the markdown about 10% off some of the key transactions?
Yes, but if we take the ARM transaction as an example, that came with a commitment to a double investment in the UK. So I think that...
Do you believe that? Because we see that in many other deals where there's an initial commitment that's short term, and then there's always the excuse long term, well, conditions have changed. And Brexit is the greatest cover of all time to say, well, conditions change, there are unforeseen circumstances that happen. Who knows how the negotiation plays out if there isn't the free movement of people? It gives these companies plenty of cover to say, well, I'm sorry, we're just going to downsize, we're going to take some of that investment away, and thousands of jobs are going to go.
There is protection under the takeover code so that commitments of that sort are made binding on companies. And you also have to remember that the motivation for deals such as these are not purely short-term currency based, but long-term strategic moves. And if people believe in the future of UK industry and UK services, then they will make those commitments.
Tim, the other factor at play here, we've heard several corporate bond specialists saying the ultra low rates that you're seeing in the bond markets, the ECB getting involved in corporate bond buybacks now, that could spur a real M&A boom. Is that your expectation? And if so, will it be based here in Europe? Or are we talking about European corporates going overseas?
I think that there hasn't really been any problem in the availability of debt finance. That isn't the issue. It's really the question of whether corporates see a stable environment into which to make long-term investment decisions. I think that you'll continue to see the bulk of the activity being from outside Europe into Europe rather than the other way around.
Come into this, Miranda, because already one of the deals we're talking about was inspired by China's richest man and Dalian behind the AMC takeover of Odeon. Do you think the Chinese are going to be ready buyers in this next phase?
Well, it's interesting because we've actually seen quite a big pickup in activity in terms of inquiries from China wanting to invest in the UK and Europe since Brexit.
In what areas?
Basically our investment banking team has had, obviously it's a long way from initial interest to getting the deal signed, and there is a much more uncertainty in getting that deal signed in the long run. But in terms of the level of interest, it's like, okay, this is actually quite an interesting opportunity for us. And if there is some interesting assets to pick up, potentially cheaper prices, the uncertainty obviously lowering some of the valuations, then that means we've actually seen sort of some more interest in both the sort of manufacturing side, and then obviously all the sort of more opportunistic sort of property investment as well.
Tim, in your view, just quickly to wrap this up, who do you think is really in the eyesight of investors? Is it big companies, smaller companies, particular sectors to watch out for?
I think certainly if you're coming from Asia, then Asians love assets. They like things on the balance sheet. It feels very attractive at the moment. So anything with a fixed asset base, I think, will be very attractive in this market.